with this fresh batch of economic data out today. What's it all mean for the Fed's outlook moving forward? For more, let's bring in Ross Mayfield, Baird investment strategy analyst. Ross, it's good to see you. So, yes, you had CPI earlier in the week hot, then you had retail sales today. How do you put it all together?
Well, the market, as you mentioned, has mostly shrugged off the hotter than expected CPI print. A lot of that is driven by housing and our view, and I think probably investors' view is, you kind of shrug at housing. What are you supposed to do in the near term? Is the Fed going to really shift back to hawkish and rate hikes over just housing? As far as retail sales, it's a noisy data print. It's just 1 month after the consumer has really been such a workhorse for 2+ years at this point. So you don't want to write it off completely, but I do think there's potential for some seasonal issues and some weather related stuff. At the same time, the market is going to take any feather in the cap that will make the Fed ease back a little bit and pivot more towards that dovish point of view. So overall, economic data has been good. Every other release this morning on the manufacturing side, on the housing side, was above consensus. The city economic surprise index is still on the rise and has been for months. So I think overall the economy looks pretty good. And if retail sales give the Fed just a little bit of pause, then that's probably a good thing for investors as well.
So Ross, then to your point, if generally speaking, the economic data continues to come in pretty good, whether it's GDP or labor market, are you then, Ross, still betting on that soft landing for 2024?
I would be, yes. I think the soft landing is still the base case. I think it's still likely. Inflation is back down to 3%. Core PCE is annualizing over the last 6 months at close to 2%. CPI ex housing is 1.5%. And we just printed 2 of the better quarters of economic growth outside of recession recovery in the last couple of decades. So, I don't know where we declare that the soft landing has happened, but if it hasn't, then it's still in the base case that it's going to happen this year for us. The Federal Reserve might be cutting a few rate cuts out of the picture and pushing them back, but I do think that there's a much higher bar to clear for them to pivot back to rate hikes or a much more restrictive policy stance. They're also talking about what they're going to do about QT over the next couple of months. So I do think all in all, we're looking at the soft landing, and I don't think the Fed has taken that off the table either.
And so, Ross, what about what we were just discussing a little bit more on the micro front than the macro front in terms of companies' forecasts coming in weaker than they have historically, and also some of the commentary we've been getting? Does that give you pause at all?
Maybe the slightest amount. Ultimately, 2023 was about multiple expansion. 2024 needs to be about earnings, kind of backfilling those richer valuations. I do agree with what you all were saying. There's kind of an impetus for companies and analysts alike to be a little more cautious than if things turn out better than expected. Yay for everyone involved, right? There is a lot of uncertainty on the horizon, both in the political and geopolitical sphere. So some of those more global companies that have global end markets and global supply chains might be feeling that pressure a little bit more, especially with the trade environment sure to be a big talking point for the 2024 election cycle. But overall, it doesn't give me a ton of pause. Earnings are coming in better than expected for Q4, as they typically do. The big bellwethers have mostly reported pretty strong results. So it's something to watch, but not something I'm concerned about yet.
And Ross, what are you concerned about? As you look ahead to 2024, any red flags? What worries you the most?
Well, a couple of things. One, I do think we're at the kind of beginning, early stages of a cyclical bull market. With that said, sentiment is no longer an asset. Seasonality is a headwind. We just seem a little overbought. So I wouldn't be surprised at all by a near-term pullback, call it 5-10% in the next couple of months. You tend to get those around the end of the first quarter in election years. So near term, I think a little bit of a correction is in order, if only to reset things amidst a broader cyclical bull market. For us, managing people's money and being in wealth management, the biggest risks and concerns to me are the things that might cause people to pull out of the market at inopportune times. And so for us, talking through the political environment and making sure that people's money is safe is the primary concern during a presidential election year that's sure to be hotly contested.
So it's interesting, Ross, one of the areas you like is industrials right now, which also sort of feeds or goes along with your theme that the economy is going to proceed okay here. Is that the main reason that you're looking at it? Is there something also to do with where we are in the economic cycle?
Yeah, I think industrials have a lot going for them. So, soft landing adjacent, economically sensitive sector, right? So you've got that going for you if you buy the soft landing thesis. They've been leadership in the market for months and months, behind big tech. They are right there. They are, technically sound, have been leadership for a long time. And then structurally, there's a lot of fiscal spending and kind of secular tailwinds for the sector, aerospace and defense spend as the world becomes a little bit more multipolar. A lot of infrastructure and IRA spending and green infrastructure, goes through these companies. So there's a lot of tailwinds over the next 3 to 5 years, in addition to the idea that if we're at the beginning or the middle parts of a cyclical bull market, those more value and cyclically tilted sectors stand to benefit. So you mentioned the kinds of names that were outperforming today. I think industrials kind of go along with that group, and they've been leadership for a while, so we continue to like them.
Ross, thanks so much for helping us kick off the show today. Really appreciate your time and insight.
Thank you for having me.